Thank you for watching this preview video at xm.com. We'll be discussing upcoming data out of the Eurozone, the minutes from the January ECB meeting, and the potential reaction in the euro. I'm Maria Pachordis, and joining me is investment analyst Achilleas Georgolopoulos. So Achilleas, on Thursday, we'll get the preliminary release of the February PMI surveys. What are we expecting there? Is an economic recovery for the Eurozone on the horizon?
Good morning, Maria. As you mentioned, on Thursday morning, we will get the preliminary release for the February PMI surveys. But why is this data important? The recent stronger US data have kind of impacted the market expectations for the ECB. So the market expects around 100 basis points of rate cuts in 2024, which is not far from what the market expects from the Fed. However, this is surprising considering the economic situation in the euro area. For example, on Friday, we will get the final GDP print for the fourth quarter of 2023 for Germany, which is most likely going to confirm that Germany did not grow in 2023. Similarly, there is a very strong possibility that 2024 is again a negative year, considering the recent German budget issues and of course the situation in China. Therefore, with inflation essentially slowing down, the focus about the ECB outlook is essentially on growth. At the January ECB meeting, President Lagarde did comment on the PMIs, saying that the recent figures point to some recovery in 2024. Therefore, Thursday's figures are very important for the ECB. The market expects a small pickup. However, it appears that it's not going to be as significant as the ECB hawks would have essentially hoped for. The ECB hawks, they probably have to have a bit of more patience, however, going into the rest of 2024, as China, as I mentioned before, is kind of limiting the possibility for an upside growth surprise in the euro area.
Now, also on Thursday, we'll get the minutes from the January ECB meeting. Do you think most policymakers are ready to signal the start of rate cuts?
Just as a reminder, in January, of course, the ECB kept rates unchanged, and President Lagarde essentially highlighted the data-dependent approach and essentially said to the markets that we need more time to examine the data, especially on wages. The minutes are unlikely to produce any surprises. However, we are going to look for, and the market as well, of course, going to look for hints from the dovish camp. Essentially, the ECB doves are fighting tooth and nail to start to get going with the rate cuts. So we see any, let's say, more aggressive dovish comments by the ECB doves, then the market could start to price in further rate cuts in 2024.
And finally, turning to the euro now, it has been on the back foot against the pound since the start of 2024. What reaction are we likely to see if we do end up getting another weak set of PMIs?
Yes, it's been a tough start of the year for the euro against sterling. Last week's mixed to weak UK data allowed essentially the euro bulls to recoup some of the losses against the pound. However, this week is very important. If we get a positive set of figures from the PMIs, then we could see the euro-pound pair edging higher towards the 0.8615 to 0.8635 area. On the flip side, of course, we get another set of weak PMIs. The market starts to price in further rate cuts by the ECB. Then we're probably going to see the euro-pound pair dropping or retesting essentially the recent low of 0.8497.
Achilleas, thanks so much. This was a preview video here at xm.com.